Good morning, gang. Good afternoon, good evening, or good night, depending on where you are in the world. Welcome back to another Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. This is just for educational purposes only, and it's my view of the markets. Now we've got that out of the way, let's jump into the Bitcoin chart and cover some zero bullshit TA, which is what you guys are here for. Before we get into that, first and foremost, big shout out to Prime XBT for sponsoring today's video. If you don't know who Prime are a platform where you can not only trade crypto, but you can also trade Forex, commodities, and stock indices. And if you use our link down in the description below, then you can get up to a $7,000 deposit bonus. It's also a non-KYC exchange, so you don't have to KYC on the exchange. So if you do want to check them out, check out the link below. And moving on. Right, so since our last video, price was hovering around down here. And what we were saying on our last video was, as you can see here, a bit of a screenshot. If we have no reaction in this zone here, now bear in mind we had a fib pull from the high to the low. And what we were looking for is this golden pocket, as we were saying at the time, it's not the strongest of levels. We had very little confluence here. Now, what does confluence mean? Once again, if you live under a rock and you don't watch us, confluence means overlapping TA in one area, which increases the chance of that level reacting, okay? But we had very little confluence around the golden pocket. We did have some confluence around the 707 fib. As you can see here, we had a naked point of control around this zone, and if we were going to react, then it would have been from this zone. But as you can see here, looking on the 4-hour chart right now, we just went straight through it and continued up. And as we said, if we flip 786, then likelihood is we're going to contest the overall highs. Now, what did we do? We contested the overall highs and we continued up. And we just did a simple SR flip and we are where we are today. Okay. Now, within this week of trades since the last video, we've not had a lot of trades in the group because it's been an up-only environment. So longs have been the play. We did have one nice trade, which was to the downside. And effectively, that was a nice double distribution day that we had. Now, a lot of people refer to this as the Bart pattern. There's your head, there's this Bart's hair, there's the other side of his head. But what we had here was a really nice play on the day because we ended up having a double distribution day on Monday. Now, what does a double distribution day look like? Well, if we zoom into the TPO chart, we can see here. So this was Monday's profile. So what you have is you have a nice range, you have a big spike up, and then you have another nice range. So what you're looking for, if we start to get acceptance back into these single prints here, then you're looking for a full rotation down to the other side of the range, which is the starting range. And what did we do? Came up and we came back down. Now, the beauty of this is we had some bearish CVD divergence up here. And this is the reason why we had the confidence in this trade setup. Okay, so what does that mean? Well, we could see that there was aggressive participants trying to market long this. And once again, you've got to think of it in context. We are at a breakout region. So once you get up to these sort of regions, people start to get FOMO. And what they do is they start to see consolidation. They're scared because they didn't get in down here. So therefore, they start to aggressively market long this. Now, we were watching at the time. We saw the absorption up here. Now, what does that mean? Well, it means that bigger players with limit orders are absorbing all these market sells. And in the end, it gives us a nice trade to the downside. Okay. And the beauty of this trade is the majority of the people in the Discord caught this one, and it was a lovely trade in the end. But what happened down at the lows? Well, we came down, if we zoom into a lower term time frame. Very simple. We came down. And again, this was a lovely trade for some of the members. Came down, ranged, took the lows, little swing failure pattern, and then we started to change structure back to the upside. Okay, and then that's what caused the next pump to the upside. Now, while we're talking about CVD and bearish absorption, we also need to talk about bullish absorption because we've had this over the last few days. Okay, and we've seen, we zoom into this chart here, how did we realize that price was going to continue this uptrend and take out these highs, the top of the double distribution day, the Bart pattern? Okay, well, once again, when we were down here in this region, and this was part of the morning update, is we could see significant bullish divergence on CVD. So what does this mean? You can see here, if you look on this chart, all these purple lines, okay, these are market sells. Blue lines, market buys. Now, what we had here on CVD is we had some significant bullish divergence on CVD. So what was happening here is people have seen this move down. And then we've had a slight bounce up towards the golden pocket. Now, what people are assuming within this are that it's going to continue to roll over. So therefore, they are aggressively selling into this, which then in turn caused some bullish CVD. So the flip side of what happened up here is happening down here. People are trying to make price go lower by market selling, aggressive participants, but they're not getting the follow through. So one thing I always teach my members is, what's the market trying to do? Well, in this instance, they are trying to force price down. The next question you ask yourself, are they doing a good job? No, because price wasn't getting any continuation. So therefore, once it starts changing structure back to the upside, these shorters down here are going to now be trapped, because once it starts pushing up, we can continue higher. And that's all we've had time and time again. Short squeeze after short squeeze after short squeeze. We can see here, big short squeeze, big negative open interest, another short squeeze, negative open interest. Okay, these are the guys that are trapped selling, trying to aggressively sell an uptrending environment, and they're just getting squeezed out again and again and again. So once again, it's absolutely fine, and I've said this time and time again, especially throughout this past 12 months, it's absolutely fine shorting into an uptrend, but you need to understand when to get the fuck out of the market. Because if you're shorting and you're not locking in profits quickly, then all you're going to do is get stopped out. And it's going to keep happening. I've been tweeting about this all week. Stop going all in trying to catch the most epic short trade of your life when you are aggressively going against the trend. Yes, I am shorting uptrends, but I know when to get out. I did. Once again, you guys come to this channel because you want the no bullshit approach as much as I won this trade. Some of the guys in the group had a lovely long trigger from down here. I did take a loss this week as well. I took this loss. Okay, I was looking for this to come back up, take out these highs into a key SR level above, and then continue down. I took a loss. Absolutely fine. I had a wide invalidation. My invalidation was upon something that we talked about before on this channel, taking out these highs. But in the end, it just continued through, and that was absolutely fine. So I did take a loss this week. So as professional traders, you've got to take winners and losses. Okay, I always joke about this, but to be a really good trader, you need to be really good at losing. Okay, you need to understand that losses are part of the game. So as much as we can have a really nice intraday trade, like the double distribution day, we will also take losses. And that's absolutely fine. It's part of it. But when you are aggressively shorting against an uptrend, you've got to know when to get out, okay? You've got to understand when to get out. So that leads us on to where we are right now, okay? And by the way, if you want access to my daily updates where I am talking through my trade plans and I'm talking about I'm taking a short here or I'm taking a long here, it's not a signal service, it's an educational community. But come along to our website, spitfiretraders.com, links down in the description below. Come here, access to our free Discord if you click this link, and obviously if you do want to get access to my daily updates and all the educational material, come on the Join Us tab and you can get access here. And within this, you'll get access to all the educational content. There's the daily update, so let's just scroll this down. We've already had a daily update video today, but you will get access to all the educational content that we have. There's hours upon hours upon hours of educational content. There's no fluff. It's all straight to the point. It's all very concise and it follows in a very logical order. Okay, so therefore you can learn everything from absolute beginners through to advanced strategies on how to trade. And that's not just a case of technical analysis on the charts, where to find good areas of interest, where to find high confluence zones, but it's also what to look for in these zones to give you that entry trigger, where to take profits, where to put your stop losses, invalidations, everything. So everything you need to know to become a professional trader is within this course. Okay, and once again, you guys know me, it's zero bullshit, straight to the point. Now, moving on. Okay, so as we said last week, we're up at a very key level. Fib from the high down to the low. Okay, we'd come into that golden pocket, which then caused the initial rejection. We've now come back above this golden pocket. Now, does this mean that's it? We've cleared the golden pocket and 100k, whatever made up numbers people come out with next? No, it doesn't. We've still got resistance. Okay. Still got resistance. Right now we are in a very thin area. Let's bring up this. Come back out a log. Okay, we're in a very thin area. We can see here on the volume profile, we're in a very thin area. Okay, now when price action moves within a thin area, typically speaking, it doesn't hang around there very long. It doesn't mean it can't hang around there very long, but typically speaking, it doesn't hang around there very long. Now, as we can see here from the volume profile, if we continue with the upwards momentum, then our next major zone is around the 786, which is roughly coming in around 57 to 58k. That's the next major zone. If we can start to flip this, then realistically, then we can start looking up towards highs. Is it going to happen in one daily dildo? Probably not. Could it happen in one daily dildo? Yeah, it could. Again, we're not here to bring out a crystal ball and say this will happen. We're here to say, where are the sticky zones? Where's likely it is that we're going to have some form of ranging behavior, some sort of consolidation, or some sort of pullback. So that's to the upside if we continue up. And once again, we're in this thin area. So if we are going to continue up here, then chances are it's going to be fairly fast in the context of things. Once again, we're looking at a daily chart here. Now, what's not going to look very healthy is if we start to reverse here and start to lose some structure, specifically this point of control here, because this is the point of control for the whole of this top range. If we do start to lose that point of control, then realistically, we can start looking down at lower targets. First and foremost around this 43k level, and if that doesn't hold, then I'm going to be starting to look down towards this 38k level, okay? And effectively looking at this as potentially some sort of flat pattern. Okay, once again, Elliott wave, something that we teach in the group. Very in-depth. If you want to learn about that, then obviously come and join us. So that's what I'm looking for right now. Either A, we start to break down. Once again, I'm not aggressively shorting up here where we are right now. I want to see some form of weakness. And likely it is that weakness comes in the form of CVD, bearish CVD. And likelihood is, again, I am going to be trading that against a very strong uptrend. So I'm going to be locking in a very early take profit one, and I'm going to be moving my stops to entry because I'm not going to be banking on follow through like a lot of people do. Okay. We're playing this level to level on the way down, but the most important area right now for us to hold is this point of control. Effectively, resistance, broken through, come back, treat it as support, and then we can start potentially looking at moving up. But obviously if that doesn't happen and we start to lose this point of control, then looking down here, 43 sort of K level. Okay, so that's on the bigger picture. That's what we're looking at. Now, hopefully you've learned something today. If you have, hit that like button. If you're not subscribed to us, then consider subscribing. And until next time, gang, as you were, bye-bye.